Gold breaks $2,500, hitting $2,515, now at $2,507, a landmark. You have to understand, and hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. You have to understand, I've been hearing about $5,000 gold since I started paying attention to the gold market back in 2009, 2010. And so for it to even hit halfway towards these claims, well, it's a significant move. And of course, a nice round number there, $2,500. We're no longer breaking $2,000. We're now breaking $2,500 on gold. So that is a big deal. So it continues here in this very volatile summer. Copper back above $4, but $4.04. I mean, nothing to write home about. And silver on CNBC here at $27.68. So quite interesting seeing gold get the premium and say silver and copper being largely left behind does make you think perhaps this is more about a fear trade. Perhaps it is this concern of an impending attack by Iran on Israel and uncertainties surrounding that. It is tempting to think that. So no let up here in the intensity of the news as we're seeing. Now, we have an update on this story we've been following for going on 6 weeks now. Amazingly, we're halfway through August, and it was on June 24th, the Northern Miner first published a story on Victoria Gold and its Eagle Mine in Yukon and all of the issues surrounding it. So we've been following this. They've had a heap leach failure, as it's being called, a failure of their heap leach facility, of the heap leach pad. And we've got some pretty stunning accounts if you go to previous shows. So we have an update. This is from Blair McBride, who has been breaking a lot of this story over at the Northern Miner. So this is from August 9th. Victoria Gold's Eagle mine site groundwater highly contaminated, Yukon government says. And of course, this is what was feared. As Chief Donna Hope put it in our interview 2 weeks ago, the longer this continues, this contamination, the worse it gets. A pretty straightforward thesis. And indeed, that seems to be happening. Turning to the article, groundwater flowing from Victoria Gold's Eagle Mine shows signs of high cyanide contamination, though much of the water is being contained on site, and regulated drinking water isn't at risk, the Yukon government says. Officials from the Department of Environment spoke at a news briefing Friday, sharing results of water testing where groundwater daylights to the surface near the Lower Dublin South Pond at Eagle. And we have a quote from senior groundwater scientist Brendan Mulligan, who said, quote, concentrations of weak acid dissociable or WAD cyanide at these locations are 10,000 times greater than the long-term water quality guidelines for the protection of aquatic life. I want to emphasize the groundwater at these locations is being collected and contained on site. And Blair continues, the news about contaminated water just came over 6 weeks after Victoria suspended operations at Eagle after a failure of its heap leach pad caused a landslide that unleashed 4 million tons of material, with half leaving the pad's containment. Between 280,000 and 300,000 cubic meters of cyanide-containing solution left the containment, according to government estimates. Victoria's share price plummeted more than 85% during the last week of June. The single asset company now has a market cap of $31 million. Victoria Gold hasn't responded to multiple requests for comment from the Northern Miner, including on Friday. CEO John McConnell spoke with CBC on July 30th. While Mulligan said not all of the groundwater flowing through the Eagle site is captured, there is no evidence yet that contaminated groundwater is entering Haggard Creek, which flows away from Eagle. Drinking water is also safe for now, said Yukon's Chief Medical Officer of Health, Dr. Sudit Renaid. Quote, the drinking water system that is regulated is still not at risk, so that is not a concern at this moment, end quote. Friday's news briefing dealt only with water sample results and not the ongoing cleanup effort at the mine, where the Yukon government was last reported to have hired contractors to build a berm to protect groundwater wells. And another concern was if you start seeing dead fish, and they are starting to find dead fish. A discharge of water from a treatment plant at Eagle last Friday led to the discovery of 68 dead Arctic grayling and sculpin fish in Haggard Creek, senior fisheries biologist Cameron Sinclair said. Victoria began discharging the water on July 31st. So they began discharging the water only last week, and dead fish started to show up almost immediately. When Victoria discovered the dead fish, it immediately stopped discharging the water. And we have a quote from Cameron Sinclair, the fisheries biologist. Quote, "The dead fish that were observed this week are believed to be due to the discharge from the mine's water treatment plant and not directly due to the contaminants that we've been seeing in the receiving environment." I mean, it's tempting to think of this as a distinction without a difference. I mean, whether it's the contaminants or from the water treatment plant, if what you're putting in the water is killing fish. But let's continue. Although the fish kill is an expected outcome of cyanide toxicity, Chief Veterinary Officer Dr. Mary Vanderkop said, "The good news is that cyanide doesn't bioaccumulate. If other wildlife consume those fish, it doesn't pose a risk to them or to the environment." Asked if the fish killed was due to something going wrong with the discharge, Department of Energy, Mines and Resources spokesman Devon Seaman said by email that Victoria had the authority to discharge water if the water was compliant with its water license criteria. Not exactly a direct answer, is it? The government also directed Victoria on Tuesday to submit lab results showing its water meets license criteria before it can discharge water again, Seaman added. The Federal Department of Fisheries and Oceans was informed of the fish kill, and Victoria was ordered to do mitigation efforts such as building fish barriers in Haggart Creek and salvaging fish downstream. Victoria has frozen and kept the 68 dead fish. Sinclair said DFO and Environment and Climate Change Canada would take the lead in case of a further investigation of the fish deaths. Yukon's Environment Department might also pursue its own investigation. Now, Chief Donna Hope brought up, I thought quite reasonably, the concern that this just isn't about cyanide. There are all sorts of heavy metals, she was saying, that are likely in this solution. This isn't just simply about cyanide. So the focus has been cyanide, but one wonders if it's missing something else that might be happening. But here it is. Actually, Blair talks about this directly. Heavy metals. Surface water samples haven't returned concerning concentrations of heavy metals, but the government has launched a wildlife surveillance program to monitor heavy metals that might have been released into the environment after the Eagle accident, Vanderkop said. Unlike cyanide, which dissipates quickly when exposed to heat, light, and fast-moving water, heavy metals can accumulate over years, she said. The government is asking hunters in game management zones north of Mayo to collect kits and take tissue and bone samples from animal carcasses and submit them to the government to test for heavy metals. So that is the latest reporting from the Northern Miner on Victoria Gold's Eagle Mine. Again, the groundwater highly contaminated, and now we have dead fish, and they're testing for heavy metals. CBC also posted a story on August 6. Yukon Premier wants to sit down with Victoria Gold board and look them in the eye. The Yukon Premier says he's requested to meet with the board of mining company Victoria Gold to discuss how they handled the response to a massive landslide and cyanide spill at the Eagle Gold Mine near Mayo. And Ranj Pillai, Premier of Yukon, said, quote, "I want to look the board in the eye. I want to have a talk with them about why they're handling or directing their management in this way," end quote. I mean, we've been basically calling for this for 6 weeks, but I suppose it's better late than never. But as Chief Hope was saying, the longer this goes on, the worse the contamination gets. So it's not clear to me. Weirdly, for all of the attention we've given this story, it's not clear to me if there's an ongoing contamination here, or if that has basically stopped and it's now about managing what has already happened. Has this been fixed and now it's just about managing the water, or is there more water? It's not clear to me. Finally, last week, Pillai blasted the company in a speech at the Council of Yukon First Nations General Assembly, suggesting it had joined a list of, quote, bad actors, end quote, that have exploited the territory. Pillai said he stands by those comments, but also believes there's room for development in the territory. Quote, "I think there needs to be an industry, and there's incredible people working in it. Nobody knows what happened at Victoria Gold, and nobody should be blaming anybody at this time, but something did happen," end quote. Interestingly, in a news release Monday, Pillai said the Yukon government had agreed with the First Nation of Nacho Dun, quote, "to pause existing consultation processes and not commence new consultation processes," end quote, "for mining licenses for a period of 2 months. So the First Nation of Nacho Dun is being listened to. it sounds like. He also said the government has further committed to not issue any licenses for a new heap leach facility in the Yukon until the outcome of an independent review into the incident at Eagle Mine. And just finally on this CBC article, Pillai said the heap leach failure on June 24th, the response to the spill, which has already seen cyanide leak into the groundwater, has dominated the work of public servants, quote, in multiple departments, end quote. Quote, we are preparing for all scenarios in this particular case, end quote. Also, Pillai said the Yukon government has asked Victoria Gold to let it do groundwater testing on site, but it needs a containment berm built around the slide to do so. Their territorial government has said it's hired its own contractors to build that berm. When asked by CBC if the mining company is doing enough, Pillai said no. Quote, my stance would be no, they are not doing all they can do from my perspective. If we are pushed to take over a site, we'll take over a site, end quote. So, it's interesting. I mean, there was a discharge of the water, and then they found 68 dead fish, which suggests that the contamination, that the water wasn't treated enough. And just a couple more stories here. I thought this was interesting within the context of the Victoria Gold story. BHP launches Indigenous partnership plan in Canada. This is by a staff writer at mining.com. BHP is taking another step to its commitment to build strong, respectful, and mutually beneficial relationships with Indigenous communities with the launch of the Canada Indigenous Partnership Plan, or CIPP. The approach has been central in BHP's development of the Jansen Potash Mine in Saskatchewan, where it started building relationships with local Indigenous groups surrounding the site almost a decade before construction began. First production is expected in 2026. The launch date of CIPP on August 9th coincides with International Day of the World's Indigenous Peoples, which is meant to encourage people from around the world to spread the United Nations message on the protection and promotion of the rights of Indigenous peoples. And finally, the aim of the CIPP, according to BHP, is to support Indigenous well-being, develop impactful partnerships, ensure accountability, and achieve Indigenous employment and procurement targets. And here's a quote from Simon Thomas, Vice President of Potash. Quote, through the CIPP, we are seeking to incorporate Indigenous methodologies and work in a way that respects physical, mental, emotional, and spiritual interconnectedness. The CIPP aims to foster reciprocal relationships, contribute to social, economic, and environmental outcomes, and support reconciliation through procurement, hiring, and business opportunities. And Karina Gistelink, BHP Asset President of Potash, added, quote, BHP's approach centers on listening to Indigenous voices, building respectful and lasting relationships through consultation, engagement, and shared goals. The plan reflects input from Indigenous partners and emphasizes continuous learning and adaptation. Our team is committed to transparency, accountability, and working collaboratively to achieve mutually beneficial outcomes for Indigenous communities and the company, end quote. So I read this just as a point of contrast here, because I imagine before every project, the mining company is going to come out and have some big speech about how important this partnership is. Because frankly, if the partnership is not made, this project doesn't go forward in Canada, from my understanding. You need social license in Canada and basically anywhere these days. So if I was the, First Nation that is dealing with a mining company post Victoria Gold, I would say, what does accountability mean? That's a question I have, is what does accountability mean? So if you don't do what you say you plan on doing, what does that mean? What is the penalty for you? That's what I'd like to know. Also, just a couple of headlines here. A significant one out of Africa. Zambia closes border with Congo, blocking key copper trade route. This is Bloomberg News via mining.com. Zambia has temporarily shut its borders with the Democratic Republic of Congo, the government said on the weekend, in a move that could delay exports from Africa's biggest copper producer. And we have a quote from Chipoka Mulenga, Zambia's Minister of Commerce, Trade and Industry, who said in comments broadcast over state-owned ZNBC Saturday night, quote, we have decided to take precautions that we seal the borders for now. We may start experiencing a buildup of trucks, end quote. The move follows protests in Congo that flared after the government of that country banned certain beverage imports from Zambia, ZNBC reported. Mulanga didn't provide a time frame on how long the government will keep the border closed. Most of Congo's copper travels through Zambia to reach regional ports. So, as they say, mining is a difficult business and you can get everything right. Permitting, get everything, extracted from the ground. All of the challenges that go with mining, waiting 20 years, whatever the case might be. You get it on its truck on its way to port, and what do you know? The trade route is closed. So, just another example of this very real-world business called mining, as many call it, famously a, quote, difficult business, end quote. Couple of more notes here. Javier Blas, add Ethiopia to the geopolitical watch list. Post-floating of its currency late July, the birr has crashed, trading now at more than 100 per US dollar compared to around 57 per dollar last month. Ordinary citizens about to be hit by significant inflation. And also Glencore abandons plan to exit coal after investors say no. This is Bloomberg. And Glencore CEO Gary Nagle says, quote, common sense has prevailed, end quote. So those are just some of the pressing stories that we are finding. We're going to have more news stories coming right up, including an interview with Dean McPherson, global head of mining at TMX Group. And the TMX has actually been doing quite well. TSX and TSX Venture have had one of their best starts in years here this year. There's a great story on the Northern Miner where you can read all about that. I'm going to ask Dean about that and how the TSX and TSX Venture Exchange are doing and more. With that, if you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner and on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, Stitcher, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, BHP workers at Escondida copper mine go on strike. And we have been seeing stories of the ongoing negotiation over the last few weeks. It has happened. This is by Cecilia Jamasmi on mining.com. Workers at BHP's Escondida copper mine in Chile downed tools on Tuesday after wage negotiations ended up without an agreement between the parts despite the government's mediation. The strike at the world's largest copper mine began at 8 a.m. local time on Tuesday and involves the union's 2,400 members, leaders said in an emailed statement, though no formal announcement has been released yet. And we have a quote from the union, quote, "We're convinced we have made every responsible effort to reach an agreement, but that wasn't possible," end quote. BHP representatives and union leaders sat down on Monday for one last session of mediated talks that extended to the early hours of Tuesday. Before the tense meeting, the Australian mining giant presented an improved wage offer directly to workers and the labor regulator, which included a $28,900 bonus for each worker. According to BHP, union leaders didn't show up to the scheduled sessions earlier Monday. Workers' leaders said the company was aware they wouldn't be attending the earlier discussions, accusing BHP of revealing the terms without prior consultation. The last significant time Escondida workers downed tools was in 2017 and lasted 44 days. The stoppage hurt production, drove global copper prices up, and became the longest private sector mining strike in Chile's history. It's estimated that Escondida, responsible for about 5% of the world's total copper output, failed to produce more than 120,000 tons of the red metal due to that strike. The stoppage at Escondida comes barely a day after 270 workers downed tools at Lundin Mining's Caserones copper mine. And let's turn to that story now. Lundin hit by worker strike at Caserones copper mine. This is by a staff writer at mining.com. Lundin Mining said on Monday it will gradually cut down activities at the Caserones copper mine after a small part of its workforce in Chile took action over a failed collective bargaining agreement. The Canadian miner had tried to reach an agreement with one of three unions representing approximately 30% of Caserones employees, or 5% of the total workforce at Caserones prior to the strike. In a press release Monday, Lundin said it remains willing to participate in meetings to reach a resolution with the union and is committed to the, quote, highest standards of integrity and transparency, end quote, and looks forward to returning its focus to safe and sustainable mining at Caserones. Scrolling down a bit, this year the Caserones mine is expected to produce 120,000 to 130,000 tons of copper and 2,500 to 3,000 tons of molybdenum on a 100% ownership basis. Continuing on, in Latin America, Barrick's CEO open to being a partner on the Cobre Panama mine. This is Reuters via mining.com. Barrick Gold stands ready to be a partner in the Cobre Panama copper mine once the Panamanian government decides on the disputed asset's future, Mark Bristow, CEO of the Canadian Gold and Copper Mining Company, said on Monday. The mine, owned by First Quantum Minerals, has been under dispute since November when protests led to the mine's closure. The new government, led since July by President Jose Raul Molino, has said the future of the mine, which accounted for 1% of global copper output and 5% of Panama's GDP, will be decided next year. And here's a quote from Mark Bristow, quote, "At the end of the day, it is the Panamanian government that has to decide what it wants to do with this asset, and we, of course, stand available to be considered as a potential partner sometime in the future," end quote. First Quantum initiated proceedings last year against Panama at the International Court of Arbitration in Florida, seeking $20 billion over the mine shutdown. First Quantum and the Panamanian government did not immediately respond to requests for comment. Continuing on, over to Europe, Rio Tinto's Serbia lithium project faces fresh protests. This is Bloomberg News via mining.com. Tens of thousands of environmental and opposition activists protested in Belgrade to demand a halt to Rio Tinto's $2.4 billion plan to open Europe's biggest lithium mine in Serbia. Demonstrators marched through the capital chanting, quote, "You will not dig," end quote, and, quote, "treason, treason," end quote, the latest sign of unrest against a project backed by President Alexander Vučić. The crowd swelled to about 40,000 by Saturday evening, according to the Archive of Public Gatherings, a private group that tracks protests. Finally, the trouble highlights the challenge to building new mines in Europe, even as governments try to secure supplies of minerals such as lithium that are crucial to the energy transition. For the world's second-largest miner, the Serbian mine has become a flagship development project as it looks to dilute its dependence on iron ore. So, I would argue these protests were somewhat predictable. It looked like they were actually trying to just move it through at a quiet time, and of course, the public found out about it, and now, according to that group, 40,000 strong on the street. Continuing on, Goldfields to buy Osisko in $1.6 billion cash deal. It's by Cecilia Jamasmy on northernminer.com. South Africa's Goldfields is buying Canada's Osisko Mining in a deal valued at $2.1 billion Canadian or $1.6 billion US, as record-breaking prices for the precious metal fuels mergers, acquisitions, and expansions. The takeover, which grants the Johannesburg gold miner full ownership of the Windfall project in Canada, is its latest move to diversify beyond the home country. These efforts include an unsuccessful attempt to acquire another Canadian gold miner, Yamana Gold, 2 years ago. Scrolling down a bit, Goldfields has been developing the Windfall project in Quebec in a 50-50 joint venture with Osisko, and CEO Mike Fraser said, quote, "Over the past 2 years, beginning with our initial due diligence in 2022 and through our joint ownership of the project since May 2023, we have developed a strong understanding of Windfall and its potential and view it as the next long-life cornerstone asset in our portfolio." End quote. Goldfields plans to bring the Windfall mine into production by the end of 2026 or early 2027, eventually ramping up to approximately 300,000 ounces annually. The project, along with recently commissioned Salares Norte project in Chile, is central to the company's growth strategy as it looks to replace output from aging assets in Ghana and Peru. And just a few headlines here. Caterpillar says 2024 profits will be higher than expected. That's Bloomberg News via mining.com. So Caterpillar, an important bellwether, how Caterpillar is doing as a kind of gauge on the resource industry. Another headline, Canada hits surprise trade surplus on energy and gold exports. And this is Bloomberg via mining.com. Canada unexpectedly recorded a $638 million Canadian or $461 million US trade surplus in June, as an expanded crude oil pipeline and surging global demand for gold drove exports higher. Continuing on, Africa's top gold producer opens first plant to refine bullion. This is Bloomberg News via mining.com. Ghana, Africa's biggest gold producer, opened a new refinery in a bid to reap more value from its natural resources. And we have a quote from Bank of Ghana Governor Ernest Addison. Quote, "This refinery will play an important role in reducing gold smuggling, which has been a major challenge for the country over the years, by providing a ready market for artisanal and small-scale miners. This gold refinery can mitigate the incentive for smuggling and help promote transparency and accountability in gold trading," end quote. And we'll just run through these final headlines here. Russia asks Niger to help as geologists taken hostage. That's Bloomberg News via mining.com. Another headline, Glencore ceases to stockpile cobalt. That's Reuters via mining.com. Another headline, U.S. bans import from 5 more Chinese companies over Uyghur forced labor. That's Reuters via mining.com. Another headline, Chinese mining firm files judicial review against Ottawa. That's Reuters via mining.com. And finally, BHP, Rio Tinto, and Qantas to invest $53 million in Australian Carbon Credit Fund. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 3.86%. That is 0.03% lower than last week. The UK 10-year gilt is yielding 3.88%. That is 0.02% lower than last week. And the Italy 10-year bond is way down at 3.58%. That is down 0.09% yield. So Italy moving a little bit further than UK and US bonds, way down at 3.58%. So yields lowering, perhaps another sign of a slowing global economy. Turning to precious metals, gold is trading at $2,510.90 per ounce. That is $65 higher than last week. Silver is trading at $27.72 per ounce. That is 76 cents higher than last week. Platinum is trading at $940 even. That is $30 higher than last week. And palladium is trading at $903 even. That is $78 higher than last week. So all precious metals higher. Turning to industrial metals, copper is back above $4 at $4.06 per pound. That is 8 cents higher than last week. Iron ore is at $101.26 per metric ton. That is $3 lower than last week. Aluminum is trading at $1.05 per pound. That is 3 cents higher than last week. Lead is also higher at 93 cents per pound. That is 4 cents higher than last week. Nickel is trading at $7.40 per pound. That is 5 cents higher than last week. Tin also higher at $14.20 per pound. That is 51 cents higher than last week. Cobalt is unchanged at $12.02 per pound. Lithium bucking the trend here at $10.79 per kilogram. That is 38 cents lower than last week, and now seeing a 10 handle on lithium. Uranium also lower at $81.55 per pound. That is $1.05 lower than last week. And zinc is higher at $1.25 per pound. That is 5 cents higher than last week. So overall, metals generally catching some relief, with some major exceptions being lithium and uranium. Otherwise, metals catching a bid, with gold the standout, breaking $2,500 per ounce. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner Podcast, Dean McPherson, head of global mining at TMX Group. We discuss good news that is happening over at the TSX and TSX Venture exchange. They are getting new listings. They're seeing quite an influx of new money. One of the best starts to the year in the first 2 quarters that they've seen in years. So some good news for the TSX and TSX Venture. I asked Dean all about it in this upcoming interview. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Dean McPherson, head of global mining at TMX Group. Dean, welcome to the show.
Thank you. Nice to be here, Adrian. It's good to be talking with you again.
It's great to have you, Dean. And we just had this big article in the Northern Miner, a fascinating article by Colin McClelland and Alicia Hyatt at the Northern Miner. TSX and TSX Venture mining investors raise most ever cash. And It kind of goes a little bit against the grain of the common thinking that it's been pretty difficult to raise money recently. Sometimes people question, is the Toronto Stock Exchange the best place to go? So tell us, what is happening? It sounds like you have some good news over at TMX Group.
I think what we're seeing is an improving environment in the capital markets, certainly as far as mining is concerned. I'll tell you, so far this year, of the capital raised through our markets, meaning companies listed in our markets raising funds out there, over 50% of them were the amount raised was mining companies doing it, right? So clearly, the mining sector, as far as capital markets are concerned, is seeing a little bit of positivity. And it's really kicked off early this year, I think, with the first quantum deal, the largest bought deal, $1 billion bought deal, largest ever in history of that structure. And when that was done in, I believe it was late January, since then we've seen a positive trend, meaning the amount of capital being raised on our markets have been increasing. And, here at the end of, we take stock at the end of every quarter. So at the end of the second quarter, we're pretty encouraged by the activity in the marketplace and the amount of capital being raised. So I think a lot of that has to do with just, investors sort of easing their position and perhaps having a little bit of optimism about the macroeconomic stuff that's specifically around interest rates easing by the end of the year, particularly by the US federal government. So I think those factors are really what's opening up a little bit. Investors are perhaps expecting easing of that environment, and that's adding to the positivity around the fundamentals in the space, really, because the fundamentals have been very strong, just being held back by geopolitical and microeconomic pressures vis-a-vis interest rates. So I think that certainly has been reflecting. Now, that being said, what I think you're hearing, where you're coming from, it's a little bit surprising. It's because that positive trend has not extended down to the junior companies as broadly as we'd like to see. So currently, in these early stages, which is not unusual if you've been in the mining sector for a long time, initially you will find the recovery being mainly through larger, less risky producing companies. And I think that's what's happening now. So we have more mining companies listed with us than any other exchange globally. We have over 1,100 mining companies listed, but still, of that number, about 800 of those companies are listed on the TSX Venture exchange, and a large number of those are very junior companies. So I think those are the voices you're hearing because they're not seeing that yet. And I don't think they'll start to enjoy the benefits of a positive market until we have maybe 2 reductions in interest rates from where they are now.
Okay, excellent. So as far as I understand you, then this is more, we might say it's more weighted, this influx of money really into listings on the Toronto Stock Exchange. They're more directed, we might say, to the larger listings, say on
Absolutely.
the TSX.
And TSX Venture, because TSX Venture, mind you, it's called a venture exchange, but it does have companies with over $1 billion, several actually, over $1 billion market cap. So there are some pretty advanced companies that are, for whatever reason, decide to stay on the venture. I think main reason is that it's such a successful market. So I would say it's better not to classify them as whether they're TSX or TSXV, but more if they're producers or advanced development companies. So really, I think the weight is not so much on exchange, but more on company stage where they are in the growth cycle. The great thing about our junior market is that it has producing mining companies with $1 billion market caps on there as well. But definitely the weighting has been biased to producers, advanced developers. And so you're probably hearing the junior exploration companies that they're not seeing investors and they're struggling still, which is true.
And so ultimately, I guess, from your perspective, this is a good news story if people aren't shying away from the larger listings on the TSX Venture because it's, let's say, thought to be more, as you say, more venture capital, and maybe for whatever reason, maybe it's harder for international investors or whatever the mindset might be.
Right.
There's no sense of we can't invest in the TSX Venture. You're seeing inflow.
Oh, we're seeing inflow. It's not a venture versus TSX. It's a producer, advanced developer versus junior mining. Junior miners, regardless of which exchange, are not seeing the inflow that they want to see or that we're used to seeing. But I think it will come, as I said, if you've been in the mining sector for a while, you've seen this process before. Usually investors start opening up to the producers, the mega companies, and, the First Quantums of the world and Hudbay of the world and such. And you'll see financing start going to those companies, those producers and advanced development companies. And then eventually it will get down to the juniors. That's what the hope is. That's what we've seen in the past. So certainly we expect that to be the model going forward. So As I said, I think all investors really are, all the experts certainly are certainly pointing to the expectation that there'll be an ease in the microeconomic factors, and those might bring some investors back into some more riskier names because it's all about risk, right? And risk appetite.
And so just to break down a little bit more of what's happening. So you said First Quantum did a big raise. I guess that was based from what my understanding of reading the article, making up for this Cobre Panama situation, which was a big issue. But it wasn't just that kind of issue. Like Capstone Copper, it sounded like they got investment in a project in order to build their project, right? So also a good news story, we might say.
Oh, absolutely. The fundamentals around the space are quite positive. As I said, it's just that investors are expecting some easing in the last quarter of this year and going into next year. I think you're seeing people recognize that, listen, there are some stories here that there are opportunities to be had here. And so you see stories like that, like Capstone, you see stories like Hudbay. There are several of them. Why I brought up the First Quantum story is that, even with the Cobre Panama situation and the risk around that, the success of that deal, and from what I'm hearing from the bankers who participated on that deal, it was pretty much oversubscribed. There was more money out there trying to find a place. And so with all the risk around that, yet they saw that sort of uptake. It really showed sort of the groundswell out there from the investor side, looking for good stories and looking to participate in the energy transition theme going forward here around copper in particular right now. So it's definitely been a very positive first half, a very encouraging first half. We're hoping that by the time we get to the end of this year, certainly things would have shifted to the juniors as well, so that a lot of our junior exploration companies, which I call the grassroots of the mining sector globally, will start to enjoy some activity to the levels of which they're used to in the past.
Excellent. And just as far as new listings are concerned and IPOs, are you seeing any action on that front?
Yes, we're seeing an improvement in new listings. The first half of this year, we added 29 new listings. Again, just to demonstrate our leadership in the mining space, this is compared to, say, Australia that had 5 or 3 new listings. So by a long shot, we have been doing quite well, and we're pretty happy with the return to new listings. As I said, 29. It's important to put that in historical perspective because we're still down from where we were prior to the geopolitical tensions that kicked off in 2022 and the subsequent inflationary environment after the pandemic and all that we saw, new listings. We were looking at close to 100 new listings per year. So while we're happy that we're back up to, last year certainly was a low year as well, perhaps hopefully the bottom, but certainly this year, right now, we're looking at 29 new listings. But again, to give it some perspective, that's 29 new listings in Toronto. Our nearest competitor, Australian Stock Exchange, had 5 new listings. So, while it's positive, it's nowhere near where we want it to be. There's still room for growth. But as I said, it's encouraging. Now, as far as major IPOs here, like large IPOs that I think a lot of the outsiders look at and get excited about, there is still a drought of large IPOs. And I think a lot of the large companies that are private companies that we know and we have in our pipeline, they're sort of waiting and time in the market based on the advice of their advisors, As I said, I think it sort of plays back into that risk appetite. Companies that are already produced and perhaps close to producing, 2 financings away from producing, represents a lower risk profile than a company that investors have never seen or never heard of before. Companies that are already listed and, large producing companies, they have a reputation. They have shown investors what they can do. So there is always a risk for new names. And I think the risk profile that we're seeing perhaps is applying to the IPO. And when we talk about large cap IPOs, that risk aversion, the paused attitude to it, is perhaps applying to large cap private companies as well as junior public companies. So the sweet spot right now, the people who are enjoying a lot of investors' attention is just, I think it lines up with the risk profile, where the risk is in the marketplace. Large cap, large producers, advanced developers are sort of matching up right now to where the risk level is in the marketplace. So even you're a great public company, there are several IPOs that we've got our eyes on and talking to, and they have been advised to wait until the risk profile gets better because just not there yet. I think once we get a few reductions in the US interest rate, then I think you'll see the risk appetite shifting a bit, and then you'll see large IPOs come into market. And I think after that, the shift to junior exploration names where people are looking for a big upside.
You mentioned the Australian Stock Exchange, which is very interesting because sometimes when I talk to the juniors kind of offline, because it's been difficult for them, sometimes they wonder out loud to themselves, should we be listed in the Australian Stock Exchange versus the TSX Venture? There is a sense sometimes that there seems to be more kind of support in a sense, from a financial perspective for the exploration companies. What do you have to say to those kind of concerns that you might hear?
Misplaced, I would say. Not true. As I mentioned to you earlier, this year so far, we've had 29 new listings. Australia had five, could be three. In terms of capital raised, also, we have raised more capital globally. But as I said, that's across the board. So junior companies, the grass is not necessarily greener in this case. There are a few times that we've seen, and it really is dependent on the specific commodity. Lithium, for instance, in 2021 was, in Australia is the largest producer of lithium. So when the lithium space took off, Australia was robust ahead of us, actually, which is rare. Typically, we tend to outperform Australia. And I'm saying typically over the past 10 years, say, right? We outperform Australia in terms of adding new listings and capital raised by companies. So I think 2021 was the first time we actually saw they exceeded us there. They had 2 or 5 more new listings than we did that year on the back of lithium. Now, lithium, we all know what happened, and it's pulled back a bit temporarily, in my belief, certainly. And so with that being pulled back, and now we're seeing a lot more interest from Australian companies looking over here. So it's interesting you're hearing these anecdotal stories from junior miners here. When I go to Australia and I talk to people from Australia, companies, I'm hearing the same things. They're looking towards us. They're looking to us to see if it's better over here because, as you and I have talked about before, the world is quite a homogeneous place, or it certainly is a lot more than it used to be. So when we look at the mining sector, it's important to look at it on a global level. And I can tell you the challenges that junior miners are facing here in Canada is not unique to, or in North America on the Western side, let's say. It's not unique to us. The Australian junior companies are facing the same challenges and have the same risk aversion that's being applied there. It's a global economy, it's a global world. And I think you'll see the same pressures that companies are facing applies on our side is exists over there as well. What happens is, and I think this is good, is sometimes you'll find favor for certain commodities and there's heightened favor. As I mentioned earlier, the lithium phase there in 2021, let's call it the lithium boom of 2021. That boom was notably stronger in Australia and for many reasons, one of which Australians are quite familiar with lithium. And as I said, they're the largest producers of lithium. So they had an advantage there and that showed. So if you're a lithium company, you enjoyed quite a bit of attention and it was overflowing to the point where a lot of Australian companies started looking for projects and have. We have quite a few of them here, over 20, I think, with projects over here in Canada in lithium. That was the overflow. And, they were financed by investors for the most part out of Australia. So you have little commodity niches that swings over there or swing over here. For instance, now I think there's a swing over here around uranium because uranium is sort of not as popular in Australia. Australia has a lot of challenges with uranium, shall we say. I think similar how the Western side looks at coal, Australia looks at uranium the same way. So what do you find? You find a lot of uranium companies looking to enter our market to tap into investor who are more comfortable with that space and knowledgeable with that space. So I think that's what you see really when you talk to juniors. And I think it's a human nature thing to always think that the grass is green over the other side when you have challenges. But I always enjoy the conversations when I dig into the numbers and the details and companies realize it. And when they start exploring it as well, they see that it's not always green over the other side. You have to look at the details as it pertains to your company.
Okay, excellent. And just follow up on this whole idea of investing in, say, Canadian markets. I mean, we've seen there's been a bit more of a clampdown, shall we say, of foreign investment just in resource companies. There's been talk from the government when they green lighted the tech coal side of the deal with Glencore. They sort of kind of said, if anybody plans on, to paraphrase, if anybody plans on taking any more, like you're going through us. What is your sense on that whole issue? Is it a concern?
It's a big concern. There's been a lot written about that and a lot said about that. And just recently, just last Friday, our CEO, Louis Anastasopoulos, Louis published an open letter in the Globe and Mail to the Canadian government, expressing our collective concern around this, There are some significant problems we have with that. I don't think anybody can debate the whole intent of the government, ultimately of recognizing what the role the mining sector will play in supplying these critical minerals, especially to meet energy transition goals and to reach a zero carbon environment. But what we're concerned with is these actions by the government without adequate consultation with the players, the stakeholders in the marketplace, just to ensure that while we act to meet one objective, we don't inadvertently destroy the overall franchise that we've built here. And certainly that's generally the gist of Louis' open letter. I invite you to read it. It's outlining the importance of the government to consult, really. I would say that's a solution that we put forward. We're a little bit surprised by some of these actions that sort of came out without any consultation and therefore lack a lot of clarity, and which the market desperately needs. But as it is now, we're extremely concerned about this particular July 4th edict from the industry minister, because restricting the flow of capital is a significant concern. If you have a global capital market and we have a global franchise here, we've built many great companies coming out of Canada. We're concerned that the long-term effect of actions like what we saw there from the July 4th edict would be that companies will basically take actions to protect themselves and their shareholders, because ultimately companies want to maximize their shareholders, and M&A certainly is a big part of that maximization of value for your shareholders. And so the inevitable response, no doubt, is that companies will redomicile to jurisdictions that they feel are more protective. We've had one example of that already that's quite public, but I tell people, I keep reminding people that there are others. We have seen other companies restructure themselves to ensure, if you remember Lithium Americas, which was probably a lot of people say is perhaps the genesis of this whole thing with the Minister Champagne, they did a restructuring. They created a Lithium Americas Argentina. And so that happened then. But now people are focused on, what happened with this graphite, SRG and their graphite project in Africa, and, redomiciling and rebranding themselves as Falcon. So the worry is that you'll see more of these. As I said, Canada certainly has enjoyed a lot of benefits from great companies that came out of this country. And a lot of those were built on M&A and having free flow of capital. So we have grave concern, not only from the initial action of the government 2 years ago, but because that pretty much cut off a significant capital flow. But this follow-up action creates another, an even bigger concern. So yeah, I would say I've been using this word very concerning. And as I said, our CEO, Louis, wrote a pretty good open letter to the government that was published in the Globe and Mail last Friday. We'll see how it plays out. We're trying to be the middle man. We're hoping to bring together some stakeholders that will pave a path forward here, which includes the minister and his team.
Okay, excellent. And just as we start to wrap up here, Dean, one of the big stories of the year, these large companies, say like in London, I think it was Shell, maybe Glencore, considering moving over to the New York Stock Exchange. I think Total in Paris, in France, was also considering this sort of thing, and Macron kind of let it be known that he wouldn't be thrilled with that. So one of the big stories, and it almost speaks to our earlier discussion of the capital going to these larger companies, there's almost a sense that this is a liquidity market, and that right now, there's kind of a outsized benefit, we might say. It's like investors want to invest, but they don't want to take huge risks on maybe smaller things. They want to be in the big markets where they feel it's very liquid. What is your sense of this story of, say, when you hear, I think it was Glencore, but maybe Shell, right, and Total? What is your sense of that story?
I think it goes beyond liquidity situation. I think London, for instance, have been less and less a capital formation enterprise, right? So a lot of people might have missed, but in recent years, our market cap has many times have equaled London, which is unusual. But that goes to show when it comes to, let's say, capital formation, the stock exchange business has been less of a focus from LSEG, London Stock Exchange Group. And just looking at, for instance, as I said, the market cap situation, it's unusual that we several times over the past 2 or 3 years have actually equaled or surpassed the total market cap of London Stock Exchange. And I think Paris has done it several times, constantly. So it's not a surprise to our industry insiders because we've been watching that. I think what you're seeing is perhaps some of those issues, some of that lack of focus on the capital markets or equities markets in particular. Perhaps larger companies are seeing, opportunities to, as you said, to generate more interest and gain more confidence in the platform in which they are. Who knows? But there's definitely something going on. And I do think it's related to the lack of growth. There's certainly a lack of focus on the capital formation side of the business in the London Stock Exchange. And I don't know what's happening in Paris in particular, but perhaps that has to do with broader issues around geopolitics and all that. So companies tend to have a little bit more confidence if their stock markets are in environments that they consider to be stable and financially protective. Investors tend to like that as well. It's a big selling point for Canada. For us, of course, the US is the strongest economy in the world, right? So it's not surprising that companies are, as we get into rocky waters here globally, companies are considering safer grounds, if you will. So that's my view on it. I think that has a lot to do with it. From our standpoint, we continue to outline to the mining companies in particular that are on those markets that are considering a move. We think in TSX has a lot of positive points to add. One big one, as I said earlier, is we in Canada here are fortunate to be located in an economy that has survived many financial shocks over the past 10, 20 years. And we think that is not to be undermined and overlooked. So I say to companies of the likes, the Glencores of the world, people that if you're looking to join a more stable stock market, there's no reason why those companies shouldn't consider TSX. I think historically, because we have such a strong growth profile, strong venture marketplace is so strong, a large part of my job is reminding these larger companies, many large mining companies listed on London, for instance, that as this concern spreads, it is worthwhile for their shareholders to consider Toronto because we are so connected to the US market that you have the benefits of having access to those investors and having the profile that you'll get in New York when you're listed in Toronto, except you don't have the excessive threat of being in an environment that perhaps doesn't understand the mining sector as well as we do. And you have the benefit of being in a stock exchange that's on fertile ground, being in Canada, in the Canadian financial system, which has proven to be exceptional.
And just finally, I suppose the move that Paladin Energy announced after the intention to acquire fission uranium and to move to I think it was the Toronto Stock Exchange, I guess that's another win for you, isn't it?
So it is. Again, it goes back to, I think you'll continue to see a few more of these because I think we are a good sell. There are lots of good reasons why companies should consider TSX. Access to capital is a big one and access to investors. We're fortunate to be neighbors with the US and also when it comes to the financial systems that exist, we have a very strong connection with the US markets and those investors. That is the largest pool of institutional capital globally by multiples. And so, as I said earlier, we represent a very distinct advantage in being connected, integrally connected with that market, seamless access, seamless trading, but yet you're located in Canada. When it comes to Australian companies, I think a big advantage is that we have a very similar legislative environment. Our culture is quite similar. So you're in Canada. If you're looking to expand and be in the Americas and tapping into that North American capital pool, it is a smart move to make it Canada. It's lower costs, lower risk from frivolous lawsuits, and you're in an ecosystem that understands mining and can promote mining and can interpret your business to investors.
Dean McPherson, head of global mining at TMX Group, thank you for joining us and sharing your insights on this week's Northern Miner podcast.
Thank you, Adrian. The pleasure was mine.
Thank you once again to Dean McPherson and TMX Group for appearing on this week's podcast. And thank you, dear listener, for once again tuning in. I hope you're enjoying the show and I hope you're having a wonderful, fun-filled August around the world. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.